Good evening, everyone. Time for a quick silver update. Interesting day today. As I pointed out yesterday, the MACD seemed to be weakening as it crossed through the zero line, and we have turned down and we're heading down. We seem to touch that $3 a month line that we broke down from. It's now appeared to become some kind of overhead resistance. So we had a big down day. Seemed to be occasioned by the news on unemployment. There's some interesting news bits that are coming out. Initially, gold and silver rallied, probably on the assumption that another qualitative easing was called for. Not really sure why they would assume that, considering that qualitative easing hasn't worked yet. So why would we assume it would work in the future? It's almost too crazy to try to figure out, so we don't really need to figure it out. Drawn the support lines here again. 28 is the one I pointed out a while ago. If we get through that, 25 is the next one. Like I said, the last time I bought was this 25 right here. I hope for your sakes we get back to here, or maybe even lower. Chance to get in at a much lower price. If you look at the closer time scale, you can see here this is roughly 8:30 is roughly when the announcements come out. You can see it came out 8:30 and we rallied real strongly, and they just hammered the heck out of it. We're talking about a move from 29.80 to 28.50. Now, if you can imagine, that right there, that's a 5% move within a few hours. Can you imagine what would happen if the stock market moved like that? So, obviously, these are highly manipulated markets. They don't, you're not going to be able to trade these with the big boys because they're a bunch of crooks. So, you just have to find the dips, accumulate the physical, and just beat them at their own game. Some interesting news. I wanted to cover this article that was on Yahoo today. Government moves to limit speculative commodity trades. And I think everybody was hoping, or is hoping, to get something really great out of the CFTC. About silver, I'm not going to hold my breath. But if you look at the tack of this, it kind of is reminiscent of the 70s. Any of you remember those days with Gerald Ford and Whip Inflation Now, pins, and all kinds of craziness like that. But if you look here, it says federal regulators took a step Thursday to limit speculative trading of oil, food products, and other commodities, responding to critics who say that has driven up consumer prices. They can't even make a straight sentence. But okay, so here we come. Here's the march of the morons coming into the markets. Governments universally are morons. Because obviously, if the problem is high prices for oil and food and other commodities, then what's the answer? The answer is to leave the prices high or let them go higher, because that's how you get more supply. What you don't do is you don't try to limit, and they blame it all on speculators. Of course, it's always speculators that they blame. The real speculators and crooks are the banks, but they're not ever going to talk about them on the short side of silver. But so what they're going to do is what they always do, create shortages, because when you artificially suppress a price, you create a shortage. That's what they've done in silver, and now they're having to deal with the consequences by all kinds of crooked shenanigans. So we can see the panel voted 4-1 to advance the rule, which opens it to public comment. They're asking for public comment. Lawmakers had proposed establishing limits on speculative trading of commodities as part of the financial overhaul enacted last summer, but they left the details to regulators to sort out. So here we can see the list of these morons here. Bill Nelson, Carl Levin, Patty Murray, this Bernie Sanders. Oh my goodness. Ron Wyden. Oh, what a frightful bunch of people. These speculators have contributed to rising volatility and periodic price spikes in the cost of gasoline and food. People, wow, you've got some really stupid people running your government. No, speculators increase the liquidity in commodities markets and therefore decrease price spikes. The more people you have in the market, speculators long and short, the more interest you have in the market, the more capital is formed by the market, the more investors you're going to have going out trying to hedge the resource and also produce the resource. I mean, there's no comment to make for these people. They're so stupid. They don't know the first thing about markets. I guess they deserve to just live in utter poverty for the rest of their lives, as China is taking over the world because they respect free markets. So instead of concentrating on silver, which is obviously being manipulated by the shorts, they're concentrating on the other commodities, which they say are being manipulated up, which is just, it's utterly silly. But to look at a few more markets here, we had crude. You can see crude came down a bit. This is what they do, these frequently. Any of you who have invested in the metals for a long times, you know, since 2002, 2003, 2004, they have periodic deflation scares. Now, of course, I can show you on the chart, the 2008 commodities crash, starting here, taking oil from roughly 150 all the way down to 30, below 35. That was a gigantic deflation scare. And they do those because they're trying to scare money back into the fiat money system. Now, this one actually forced a collapse of the banks. And it almost forced a complete collapse of, I mean, we're still working this out. But they would rather do anything than allow gold and silver to seek their real value. And as you can see on that chart that we showed, gold, this is in here, gold never really reacted that much. I mean, it almost hit 1,000, and then they crashed it when gold was about to go through 1,000, and it went down to 650. That's a pretty good run. But if you look at something like silver, it absolutely got destroyed, and it went from 21 down to 850. So on a percentage wise, they just absolutely crushed it. And that is based on the speculation that silver is industrial, and therefore because it's an industrial commodity, that the use of it will slow down when the economy slows down. So silver will be more impacted by a downturn than gold. Now that's, you know, that reasoning only holds, one, if a precious metal investment interest doesn't also determine price, and two, if the economic downturn is worldwide, which, as we've seen, it hasn't been. So as we begin to see the United States become increasingly isolated from the rest of the world, Brazil didn't turn down, China didn't turn down, India didn't turn down, and these places turned down. The United States and Western Europe and England turned down. But there's 2+ billion consumers who want cell phones and televisions and laptops in China, so, and India, and all throughout the Asian continents. So the argument doesn't necessarily hold that what happens in the United States economically will impact the silver market, because this stuff, nobody's going to be buying this stuff. I don't buy it. I think it's manipulated, and so I think this is just another one of their deflation scares. But it may give you an opportunity to buy some cheap silver. I think 25 is probably the lowest we'll get to if we're lucky. Maybe we'll go lower. Some have said 20. I can't really see it with the MACD the way that it is. If we go out to the daily, it seems to be reloading back to the zero line with really not falling. Pretty much we're going to have to drop off a cliff in the next 2 or 3 days. Maybe Friday or some part early next week, we're going to have to drop down through 26 and 25 very rapidly, because that's how silver moves down, as you can see over here. If we don't do that, I don't think it's very likely that we will. So I will probably turn up after that point. So anyway, we will wait and see tomorrow, and I'll talk to you then.